When we see the central banks of the world buy more gold than at any time since 1967, and no one in this country has any clue that that's happening, it's frightening. When we see the inventories of metal on the COMEX and the LME bled down to the lowest levels ever, and no one talks about what that really means, it's frightening. What you are seeing is a massive de-dollarization using the misdirection of information and price to blindside the public.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for January 17th through January 24th, 2023, while supplies last. This week we feature our choice 10-ounce silver bars at just $2.25 over spot per ounce and backdated quarter-ounce Canadian maple scruffies at only 4% over spot. Frequently you have to choose between high-volume bars like 1,000-ounce bars to get exceptionally low premiums, or pay a higher premium for more liquidity. But these Our Choice 10-ounce silver bars come from major mints, are 3/9 fine, and provide a great way to stack quickly while maintaining a high degree of liquidity, all at the low premium of just $2.25 over spot per ounce while supplies last. Next, we have quarter-ounce gold maple scruffies at 4% over spot. The Royal Canadian Mint packages quarter-ounce maples in sheets, which most people find inconvenient for storage, trade, or transacting, so they frequently remove them and put them in individual flips or in tubes. As soon as the packaging is removed, they go from being considered brilliant uncirculated to what is called scruffy condition. They may occasionally have a nick or scratch, but by and large are in excellent shape and nearly indistinguishable from their brilliant uncirculated counterparts. And the best part is that these so-called scruffy coins are available at just 4% over spot, much less than the 10 to 15% that you would ordinarily pay for the increased liquidity of quarter-ounce gold. So if you'd like to purchase 10-ounce silver bars at just $2.25 over spot, quarter-ounce Canadian maple scruffies at only 4% over spot, or if you'd like to inquire about any of our other products or services, call us at 1-888-815-4237. That's 1-888-81-LIBERTY. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're here again for our weekly market update with Miles Franklin, Precious Metals CEO Andy Schectman. Today is Tuesday, January 17th, 2023. Andy, thanks for coming back on Liberty and Finance.
Good to see you again, Dunnigan. Thank you. Appreciate it.
If you can't hear me clearly, it's not the fault of my microphone. It's my frog in my throat from getting over a bug here. So my wife's got me on a whole bunch of herbal teas. We'll kick this thing in the pants. And,
coming through clean, loud and clear.
All right. Well, thank you back again with our audience. They tune in every week to hear you give us an insider's update on what's going on in the precious metals retail supply chain. Before we get there, if we could look at some macro events, one thing that was I just came across today was the Bank of Japan saying that perhaps as early as tomorrow, Wednesday, they may stop defending their yield curve. So could you talk to us about what you think that's significant and what you think people need to keep their eyes on?
Yeah, you could argue that it could be the United States, just a mirror image of what we could expect here in the States. Look, as it is right now, the central bank holds 89% of most of the bonds. And you have to wonder who's buying the bonds here. If we're led to believe now that the Cayman Islands is the largest purchaser of our treasuries, well, you have to wonder, is that just a shell corporation, the United States Federal Reserve? It sure seems that way to me. And what this will do ultimately could be very beneficial to gold. I mean, if when the rates rise in a country's treasury market, it makes the currency more appealing, a greater return. And certainly as we see the dollar coming off its highs, this could be another reason why we could see gold do well in the face of a falling dollar. Let's remember that, gold and silver did really well in 2022, despite a very strong dollar. Now, that really well is subjective. Some people would say, well, it didn't really do well if it was flat. True that. Gold was flat almost completely and totally to the penny year over year, yet it outpaced dramatically the equity markets, which were down 20+%, the 10-year treasury down 16%, the third worst year since 1700 in the treasury market, and the worst fall ever in the history of the 10-year Treasury. So, you can put things in perspective. We can look at silver up 3% in dollar terms, which did better than all of the above. But when we look at it in other currencies that weren't as strong as the dollar, all-time highs in the euro and up 12% in the pound. And so, look, the bottom line is simply this, is that the Bank of Japan is, I think, going to have to abandon the yield curve control. And I would argue the same fate is in store for the U.S. I would be shocked if they are able to keep rates at a manageable level without disrupting the markets. And this is just another one of the macro trends that we need to keep our eyes on. And look, the truth of it is that interest rates need to be set by the market, not by the central planners. And the distortions that are created when a central bank tries to suppress interest rates unjustifiably, or let's just say unnaturally, not only does it anger Mother Nature, but it creates too many distortions and anomalies that ultimately have to be dealt with. And that's what we're seeing right now in Japan. And I will argue that's ultimately the fate that we will face here by suppressing interest rates for such a long period of time.
It reminds me of the metaphor that you've used in the past about holding a beach ball underwater, how far you can push that down before the pressure becomes too unnatural and you're fighting nature. Can you talk to us about the implications on the gold and silver markets and the direction you see those at the moment?
Well, in conjunction with manipulation of interest rates, there comes a point where when the price of gold and silver is controlled and kept too low for too long, that it distorts the real world supplies and the real world demand. And I think you could argue that's what we're seeing right now. Now, from a bullish standpoint, technical standpoint, last week we saw what's called the golden cross in gold, where the 50-day moving averages crosses above the 200-day moving average. From a technical standpoint, which, look, I'm not a big fan of technical analysis within a rigged market, but nonetheless, it is bullish and it should get more attention by the money managers. But I think it's important to note, following the same theme that we've talked about, look, I've been saying for a very long time that the bleed down in inventory from the top on down has created an environment where the rhetoric and the price that we see is being betrayed by the most sophisticated and well-funded investors on the planet, drawing down supply. Case in point, last Friday, I believe it was Friday, January 11th, whatever day that was, 7 days ago, 1,200, actually that'd been Monday, I think. Well, whatever, it's irrelevant. But 1,223 contracts of spot gold. Spot gold, when you buy a contract at spot gold, that means for delivery. 1,223 contracts of spot gold were sold on January 11th. That means someone purchased $229 million in 100-ounce gold bars in one sitting. One day, one group purchases $229 million worth of gold. And then just a few days ago, another 505 contracts were sold, most likely to that same purchaser, worth $96 million. Two transactions for delivery off of COMEX totaling $335 million, $330 million, whatever the number is. Who's got that kind of bread? When we are seeing a bleed down from the top on down, it's not just in silver, it's in gold too. Yet these are movements that are not being identified because of the suppression. Now, let me try to explain to you all how this suppression is done in a very easy way to understand. So I asked my trading desk, what do we need in our margin account to control a 100-ounce gold contract? Because we hedge all the metal we buy. And I was trying to figure this out to make it really easy for people to understand. Get this, as of last week, a 100-ounce gold contract, futures contract, worth at the time, it was $187,760 worth of gold, only requires $6,900 in our margin account. That's it. So with $6,900 and a very small amount for the trade, just a few bucks, you can control $190,000 worth of gold. Now, what if I am a commercial bank or a central bank and I decide to throw $500 million into my margin account? I can create whatever perception of reality I want. And that's what has been done for a very long time. But what we are beginning to see is where the rubber meets the road, where technical standpoint, it's very, very bullish. But more importantly, the supplies of both gold and silver are being bled down to where if you are short and an entity stands for delivery, you're in trouble. So much so that the LBMA just came out the other day and said because of the unprecedented outflow of silver, some 10,000 tons in 2022, they say that if demand stays like it was in 2022, there will be not enough supply left for the LBMA in 2023. That's the biggest epicenter of metal in the world. Now, look, they are already telling us that silver on the LBMA is at the lowest level in the 140-year history of the exchange since they've kept records. And so now you have an environment where from the top on down, the big money has used the suppression of price to reposition themselves. Now, a lot of this, what I'm saying, is confusing when you look at the environment that we find right now in metals, where it's the best supply and lowest premium I have seen on everything we have, with the exception of Silver Eagles, for 3 years. For 36 months, not even close. It's confusing, but there doesn't have to be a correlation in immediacy between what the most sophisticated and well-informed and well-funded investors are doing way up here and what just happens to be in 23 allocations and the slowdown related to the holidays. It's a perfect environment. And if you want to do what the biggest money in the world is doing, then you take advantage of these premiums and of this availability right now. Because, look, the truth of it is that the investing public owns virtually nothing in the way of precious metals. And if we see a continuing deterioration in the with what is supposed to be the hedge, that being 10-year treasuries, which had their worst year ever on the 10-year treasury market, down 16%. At some point, there's going to be an exodus out of traditional assets and looking for something that the biggest money in the world has already shown us is the path they're taking, and that being real world commodities in your possession, which are not simultaneously someone else's liability, which leads me to one other point. And I know it's not what you asked me. You asked me about gold and silver, but let's talk about systemic reactions and unintended consequences. There's a leaked video out there right now from the FDIC Systemic Resolution Advisory Committee, the SRAC. And basically, what the guy is saying is that he says one of the FDIC members, he says you have to think of unintended consequences of taking a public that has more full faith and credit, or full faith and confidence, rather, in the banking system than maybe the people in this room do, he says. And then he goes on to say that although institutions don't want to see a huge run on their deposits, they likely will soon, which will bring about the need to impose bail-ins. He says people need to understand that they can get bailed in, but you don't want a huge run on the institutions, but they are going to be. And it could be an early warning signal to the FDIC and the primary regulators when these things happen. He says the implications of what's being discussed at this meeting, if it gets out to the general public, will create unintended consequences. But then again, here's the reality of it. There's only $125 billion in FDIC assets, insuring $9 trillion in the bank. And so when you talk about misdirection that I've talked about forever, it's not just in price, it's also in information. We are being misdirected into believing all is okay in the bank. We are being misdirected into believing all is okay in traditional assets, regardless of the fact that they underperform tremendously. The third worst 60-40 split. Remember, the pension funds and the financial advisories and the insurance companies, they all use a 60% stock, 40% bond allocation. Most of them do. That's kind of the mantra. The third worst in history. So when you see the traditional forms of investment being really ransacked, and yet we're told to hang on because just like in 2008, it got better. But in 2008, they embarked upon a 12-year expansion of credit and low interest rates. And right now, what we are seeing is the opposite of that. With over $2.2 trillion in the reverse repo market, the banks are earning 4% from the Fed, some $650 million a week in interest to the banks, instead of lending it out into the system the way they did for the past 12 years. They are reining in credit, and it's turning into an environment where you have to start trusting your gut, not the information that the heads of these lying institutions are giving us, not the fact that premiums and availability is good right now in metals when you see it being literally bled down at levels that no one's ever seen before, where last week, in 2 days, you see somewhere in the neighborhood of $330 million worth of gold delivered off the exchange. It's continuing, and we're all being misdirected by price and by rhetoric. And it's just more of the same. I think it's going to be a very, very interesting year, and it's already shaping up to be just by seeing what's happening on the deliveries off of COMEX last week.
Yeah, you mentioned some of these informed players removing physical metal from the exchanges. We've also seen that on the sovereign level with strategic materials. Certainly, we saw through COVID and a lot of the global supply chain interruptions and disruptions how important it is on many other industries when suddenly you have a critical material, a strategic material that you don't have access to, and how vulnerable individual countries have become by outsourcing and offshoring and that sort of thing, rather than trying to cultivate domestic supplies or find alternate supplies, et cetera, or stockpiling for that matter, critical materials. Can you talk to us about what just came out around the progression of the story about BRICS in the last week or so regarding rare earth elements?
Yeah, well, it came out and basically said, first of all, you had the president of Wadudu, I think is his name, and he is, I forgot the country. I'm sorry. I know it's President Wadudu, one of the small countries in the Eurasian zone, who basically came out and said that he's calling for a OPEC-style cartel of the rare earth metals. The majority of all of the rare earth metals, it was the article talked about, are held in China with I think it was 44 million tons that they hold within rare earth oxides that they have within their soil. The next closest is 20 million believed to be hidden in the Brazilian ground. So between Brazil and China, you have the majority of all the rare earth metals in the world. And so when we talk about going from a fossil fuel combustion engine model into a green environment, the majority of all of the elements needed to make batteries, as an example, are found within Brazil and China, part of the BRICS nations. We have a very little bit here and a very little bit anywhere else. China holds the majority of all of them. And then you have President Wadudu come out and say, hey, well, we should impose a OPEC-style cartel for rare earth metals. And so, this is not a very well thought out policy where we go from the frying pan into the fire, as far as I'm concerned. But that article that came out in Mining and Metals on January 13th basically says that, according to the U.S. Geological Survey, 44 million tons are found in China, 20 million tons are found in Brazil, and that's the lion's share of the rare earth metals that are found geologically around the globe.
It just goes to show how we are so exposed. People have asked us from time to time, since the roots of our channel in preparedness the name of it used to be Reluctant Preppers. We've talked about all kinds of different forms of preparedness, food, energy, light, water, shelter, protection, all kinds of things. But the financial topic that you and I have brought to our discussion most of the time has risen to the top of the pile because it seems to be such a clear and present danger. When you look at all the various sources of potential harm that could come impinging on families thriving going forward, this seems to be one that's in our face right now, is this financial one. And one aspect of it is these critical commodities. As you've talked about, this BRICS global east-west pivot away from fiat currency, the because I said so and I have a club in my hand method of monetary control, to one that's based on real things like these strategic materials. Any further thoughts on that before we talk about this week's special?
No, I mean, that's really what's happening. It's these countries are without question not only the largest accumulators of commodities on the planet. They're the largest producers of it as well. And this will be the glue that makes the concept of the BRICS nations work. I was reviewing the Belt Road Initiative the other day, aside from the fact that all 13 OPEC producing countries are on the Belt Road. And so up to about 152 or 3 countries. And you're talking the majority of the world is joining in. When you put together the Shanghai Cooperation Organization, the Belt Road Initiative, and the BRICS and all of the BRICS plus countries, you are literally talking 80 plus 85% of the entire world's population that are all joining together. And it's a very frightening thought experiment if I called it a linear progression of events. If you put all of these events together, see the relationships that are being made, see the efforts that are being put into place to drain the system. When we see the central banks of the world buy more gold than at any time since 1967, and no one in this country has any clue that that's happening, it's frightening. When we see the inventories of metal on the COMEX and the LME bled down to the lowest levels ever, and no one talks about what that really means, it's frightening. What you are seeing is a massive de-dollarization using the misdirection of information and price to blindside the public. And I'll keep going back to what Rick Rule says. 0.5% allocation is probably generous when we talk about the public's investment in precious metals in this country. And I think, Dunnigan, to be objective, and you can't be successful in business if you're not objective. If you are drinking your own Kool-Aid, you will always be outed out as a fraud. And I just truly do believe that every way that I try to poke holes in owning gold and silver, not to become wealthy, but because it is wealth, has never been more important. And when you see the effort to which this is happening by the most sophisticated investors, I want people to understand that taking possession off of the London Metals Exchange or off of COMEX is incredibly difficult. It is not an easy process. It's not like calling Miles Franklin and placing an order. It is very, very sophisticated and very difficult to do. And the people who are doing this, who are taking possession of $330 million worth of gold in 2 days and having it delivered, this is incredibly significant, and it is foreshadowing to the nth degree. And I think people need to wake up and realize this, that you can't focus on what's happening on the retail level here. Yes, it's relevant, but here again, what is the retail level here? It's the pimple on the elephant has been buying a lot over the last couple of years. But when the elephant comes in, yes, that will put an exclamation point on the rally for metals. When the whole world says, my goodness, what have I missed? I need metals now. Then you get the exclamation point, the apes and the silver squeeze and all the stuff we've seen. Sure, it's nice. It's helped. But COMEX right now and the LME is where you have to focus. And when you see the bleed down to levels the world's never seen before, getting zero attention to the point where, how many people know that $330 million worth of gold was delivered in one day last week? Nobody. And do they even care? Do they realize the significance of that? Do they realize that everyone talks about the drawdown in silver over the last year? Do they realize that gold, the drawdown in gold on a percentage basis was almost twice as much as silver? So yes, silver gets the attention. But when you see the central banks, the most well-funded, well-informed traders on the planet buy more gold than at any time in 55 years, you all need to wake up and realize that we're going to, just like one of my favorite statements of all time, and I think I shouldn't call it my favorite if I don't know who. I think it was Hemingway when they asked him how he went broke, little by little, then all at once. And that is what is happening. The exchange is being bled down little by little by little, and bang, something's going to happen where they won't allow deliveries, or it'll be force majeure, or there'll be a problem. And the same thing you could argue is happening at the chipping away of the dollar as the world reserve, little by little by little, then all at once. So look, there isn't always as newsworthy of information every week as what we've talked about over the last 3 years, but it is a continuing thread, a continuing trend, and watching the amount of gold taken off in 2 days last week is just further reinforcement that The biggest money in the world is using all of the misinformation, the misdirection in price and rhetoric to reposition quietly and little by little. Then bang, the public will catch on and it'll be all at once. So not there yet. Just like the FDIC said, don't tell the public, we don't want the unintended consequences. We're being lied to on many levels, and you have to trust your gut. Because if you don't, you'll be like one of my family members who I love dearly, and I won't out this person. They are as brilliant as anyone I know. Incredibly well read. Only thing is they read the wrong information, and they're going to be just like everyone else, caught completely blindsided by believing the road to retirement is only paved with stock certificates and mutual funds, and you'd be out of your mind to buy gold and silver. And why would you ever do this? Everything's going to be fine. One of these days it won't. And I think we are ending or becoming very close, getting very close to the end of the Keynesian Western experiment, and at the expense of much of the world. And I think much of the world for many years was underdeveloped and had no capacity to challenge the West. But that's all changing right now, because this group that they're forming is a very solid one, backed by commodities, not by false promises, not by a military. Their military combined will be stronger than ours. Their GDP combined will be stronger than ours. And their system will be backed by commodities, and let's hope in a transparent manner, not by misdirection, misinformation, and an administration that seems to be doing everything wrong at a period of time when we should be trying to mend fences instead of putting them up.
Yeah, I want to remind everyone about that Dodd Frank risk. Since the 2010 Dodd Frank Consumer Protection Act supposedly passed by government for the banking system, we are all unsecured creditors of the bank. If you're using the bank, nothing in the bank belongs to you. And that's something that people say, what are you talking about? Look up Dodd Frank 2010. And whether that's checking accounts, savings accounts, certificates of deposit, contents of safe deposit boxes, et cetera, et cetera. So
let me say one more thing about that too. I don't mean to interrupt you while you're on the train of thought with banking. For further proof that the world banking system is in major trouble, the second largest bank in the world, Swiss Credit Bank, is this close away from bankruptcy. Recently received $20 billion from the Federal Reserve, the bank of last resort, and they're just mentioned they're laying off 9,000 workers immediately. So you're talking the second biggest bank in the world has to be bailed out quietly. And why don't we know about the fact that the Federal Reserve gave a bank in Switzerland $20 billion? Why don't we know about that? Why is that not on Fox News or 60 Minutes? Why? Because they're trying to keep us like a frog in a pot of boiling water that, well, you slowly turn up the heat until we all fall asleep. Wake up to a new reality someday when the second biggest bank in the world has to be given a $20 billion bridge loan by the Fed to stay alive, the bank of last resort, and they're laying off 9,000 workers. Goldman Sachs just laid off 3,000. There are problems in the banking system. And the systemic nature of it, listen to the name of the group at the FDIC that had these meetings, the Systemic Resolution Advisory Committee. And they're saying there's going to be bank runs. And the institutions know it, but they don't want the public to know it. This was a leaked video. So, it's happening. And whether or not people want to realize it or wait until it's too late, we can only do so much. But I will tell you that this is a lot bigger than people think when you're seeing these types of actions taking place.
And we had mentioned that FDIC meeting before in an earlier interview. We'll put the link to the story about it, the article about it, as well as the full proceedings. If you want to watch the whole thing, guys, the whole link will be in our description of this video. Andy, what have you got that people can consider if they want to move some of their assets out of the banking system, out of harm's way, and into something solid?
We bought 5,000 10-ounce bars, and they're most of them are one variety. We're calling them assorted, and they're very nice. And honestly, it'll be at the least expensive price that I've sold 10-ounce bars for in 36 months, at $2.25 over the price of silver for assorted 10-ounce bars. They are secondary market, but they are very, very nice. We bought 5,000 of them. They're in stock. And we also have something very interesting. When you buy fractional Canadian maple leaf coins, gold, they come in a thick plastic, kind of like a mylar plastic, kind of like the thick plastic you'd see in a frozen food bag. I mean, clear though, really clear. They're a pain in the butt. And a lot of people will cut them out of those plastic sleeves and put them in tubes. But once that happens, you're not allowed to call them brilliant uncirculated anymore. The Canadian Mint does not take that very kindly. In fact, if you're a distributor and you are caught selling coins that are no longer in the mint original plastic, calling them uncirculated, they could very easily strip your association with them. So they're not brilliant uncirculated. They're what we call scruffy. Now, that means there could be a scratch on them. Probably not, but there could be, because 24 karat gold coins lend themselves to abrasions and scratches and whatnot. This is the reason they come packaged the way they do. This is the reason that the U.S. mint coins, the Eagle, not the Buffalo, which is 24 karat, but the Eagle is 22 karat. It has a full ounce of gold in it, plus 1/10 of an ounce of alloy to give it strength, so you can hold it without the risk of scratching. When you hold a 24 karat coin, you have to be very gentle with it. But nonetheless, if you had 400 1/4 ounce maple leafs, you'd have 10 sheets, 10 plastic sheets like you could put into a 3-ring binder, instead of having, like 10 small tubes that you could hold in your hand. And so a lot of people, when they buy these, will cut them out and put them in tubes. Well, we bought several thousand of these 1/4 ounce maple leafs that are not in the original mint plastic, but they are in tubes, or plastic flips if you were to buy them onesie, twosie. Normally, these coins cost you as much as 11, 12, 13% over the price of gold. We have them for 4% over. So if you're looking for gold in a form that would allow you utility, God forbid you trade with it or have to barter with it or just want the flexibility of fractional gold, I haven't seen anything like this in years, where you can come literally, you're 10% under what a 1/4 ounce maple leaf would be brand new. You're getting them for 4%. Now I don't think, I can look real quick. Just want to make sure that I'm right on that number on what the regular ones go for. Regular 1/4 ounce, it's going to be 11.5, 12, 13% on a regular 1/4 ounce maple leaf. We're selling these at 4% over. So they're in stock along with the 10 ounce bars. Great value. And in both cases, without question, 100% the lowest premium we've sold them for in 36 months on both of them. In the case of the maple leafs, I can't remember ever selling anything Royal Canadian Mint Gold in a fractional form, 1/4 ounce at 4%. That's usually cheaper than you're buying the 1 ounce maple leaf for.
Well, people, please be aware that often in the past, when we have these exceptional values announced Tuesday night, 9 p.m. Eastern, that usually we got about 36 hours till that supply is exhausted. It completely depends on the demand and the existing inventory on those. So don't think about it for 2 weeks, then call us up and ask if we still have that special. Andy, as always, on behalf of all of our viewers, thanks for joining us for this weekly market update on Liberty and Finance.
Pleasure is mine. Feel better, buddy, and look forward to seeing you next week, Tuesday. Stay well.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, Metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.